Thank you, Mattia. Indeed, good afternoon, everyone. It's a pleasure to welcome you to this joint event on the DPM 2.0 standard. So we EBA are very happy to organize this session and to give you for their insights on a project that is really relevant for our institutions, and we thought also reporting entities from both sectors would be really. I will just introduce the speakers and the crew in this. You know that there will be more introductory remarks from our first participant, so Director of Data Analytics, Reporting and Transparency Department at EBA, Mary Rimanen. After it, there will be an introduction from the coordinators of the DPM standard in EIOPA and EBA. We will have a break then to continue on more details about the differences also for the different sectors that are involved. And after that, my colleague from EBA will take the moderating. So please use the chat for questions. And without further ado, I give the floor to Mary for the introductory remarks. Thanks.
Thank you, Daniel. Let me just share a couple of slides. So I'll put the slides on. Here we go. Okay, so very warm welcome also from me, and as Daniel already said, we are very excited to present you the DPM 2.0, the project of refit of the DPM 1.0. We've been working on this already 3-4 years, so we have published also the final DPM 2.0, but we also want to reach out to you to tell exactly what it is and potentially how it could be benefiting your work. This afternoon is an introduction session, but if there is more interest, we can of course go more into technical details in future sessions. So EBA and EIOPA have collaborated on this journey to refitting our data point model. Why we do this together? We have since the beginning used the same DPM methodology. We have more or less the same DPMs from the beginning. We have also both of us integrated all our reporting modules and frameworks to the insurance and pension side, and on the banking side, everything is fully integrated and harmonized already. We have also from the beginning started to do this metadata-driven strategy. So we have both built the reporting frameworks and how we use data in meta-driven basis on the metadata. And we face very similar challenges. We have more data, more granular data, more complicated data, more reporting entities, and different types of challenges that we thought that we should refit the DPM that we currently have. And then we wanted to work together in the development, facing all the joint challenges with joint forces, and have done this new DPM 2.0 together. And we think that this could also serve more long-term goals, not only in banking or insurance and pension regulatory reporting, but also across different sectors for the European regulatory reporting and working towards having a common single data dictionaries across various sectors. So currently where we are, EBA and EIOPA, we share the methodology. So we have syntactic same common data dictionary. We have not integrated the content, but we could also do this at some point. First step for us was to have a joint common, fully shared methodology for the DPM, so DPM 2.0. Then indeed, as mentioned, we already had the reporting frameworks integrated on both our sides, and we had the DPM, but because of these challenges, we wanted to together to refit the DPM and further support our more strategic objectives, both at EIOPA and EBA, to have a DPM that is fully fit for digital processing of data, supports various parts of the data and reporting preparation of reporting and data use, is agnostic to different technologies, different types of data, and indeed can work on all parts of when you start preparing your data for the regulatory reporting all the way to the analysis. And we do have also in Europe a supervisory data strategy for the EU. And we both at EBA and at EIOPA fully support these strategic developments, and we have our own data strategies which all work towards the same common goal of having more efficient reporting ecosystem. So the preparation should be more efficient, but also more sharing, more data, reuse of data. And with the DPM, we can DPM 2.0, we can contribute to make the data life cycle more efficient, and that we could all use technology and prepare in more efficient way the regulatory reporting, and also improve and increase the use and sharing of it. So we aim for more standardization also across sectors. So we now share the DPM standards already across sectors of banking, insurance, and pensions. We want to contribute and promote metadata-driven processes, integrated and embedded internal data, so that it would be more useful on the reporting entity side as well to use the data, not only to prepare it for the specific purpose of sending it to supervisors. And then we want to have going in the data cycle towards the use. So we want to share more data among authorities so that we can all reuse and get more benefits out from the same data. And we believe that DPM 2.0 is contributing to these objectives. Then, so I will now hand over back to Daniel, and for the EIOPA EBA teams to give you more details on also how you could potentially benefit on the DPM 2.0 when you prepare your regulatory reporting. And then we will also hear from Ernst a use case of using the DPM, and then finally a journey towards how this will be implemented in the banking, insurance, and pension sector. I very much thank you at this point of time, and wish you all a very interesting and interacting afternoon with all kinds of issues related to the data point models. So thank you very much. Over to you, Daniel.
Thank you very much, Mary. I see we have now reached 400 participants at this point. I think we have a very varied list of attendance. We have from the different sectors, from insurance companies, pension funds, and also I saw some other representatives from the vendors, software developers. So I think that our interest is to bring this transparency of this important project for the data point modeling. And this is what Aitor Azcuaga and Carlos Martins, Aitor Azcuaga from EIOPA and Carlos Martins from the EBA are our coordinators for the development of this refit of the data point model from the 1.0 to the 2.0 version. And I think that Aitor, you will be first introducing the journey we did together.
That's right. Hello, I'm Aitor Azcuaga. I will setting up a little bit the scene today, and then I will hand over to Carlos to do part of the presentation, the modeling. Let me share my screen. Okay, should be coming the screen, I hope. Yeah. Okay, today we are going to, well, actually we had a meeting this morning with the insurance industry, with Meet the Market 7 in EIOPA, and I had a slot of very quick slot to brief about DPM, which is complex. Today, the idea of having actually 2 hours of almost 3 hours of seminar is to give you a little bit of explanation, a deep explanation that maybe we haven't done before to the industry about what is our methodology. In our context, we are briefing quite a lot on this methodology to the national competent authorities. We are particularly EBA and EIOPA heavy users, but also national competent authorities. While we were preparing this seminar, we're saying yes, but the industry, they are not so much aware of the data point model. So maybe it's good now we have a new version to present to them and try to give a little bit also of overview. So there will be today a little bit of spaghetti. So I have prepared these slides because we are going to tackle in several concepts. It will not be only DPM. It is around DPM, but there will be several things that are going to come around the data point modeling, like the XBRL, or the reporting or integrated reporting also for DBA or DPM studio that we are developing a tool. So there will be a quite set of concepts to discuss. I hope that we are going to be able to give you a little bit more clarity and more in particular for the data point model 2.0, what we are doing. Basically, I want to start defining, of course, data point model is a methodology, it's a modeling technique. There are other techniques in industry for database, let's say, the entity relationships. You have also SDMX that is very used for statistical data. There are several modeling methodologies that we can use depending on the scope. We took the DPM back on the time on 2011 or 12. EBA, I think, started to use it, and we follow EBA. We heard about EBA, which was also EIOPA at the time before starting actually the regulatory reporting on Solvency II. We adopt also the data point model for development. Since then, the DPM is now an ISO standard, so it was evolving from the beginning, and I think it was like 2-3 years ago was adopted by ISO. It was a European standard already in 2014 or 15, but was evolved to an ISO standard. This is the ISO 5146, so we are not, let's say, using something out of the standardization. Is a formal standard and is described, as I put on the slide, as a data-centric model for organizing business terms and concepts in a hierarchical order. It is used to present data in various reporting scenarios, which derive from undertaking legal requirements in business-friendly and non-technical manner. So it fits, as you can see, very well our business case. We are doing regulatory reporting, and when you do regulatory reporting, so you have normally these big reporting templates that are quite complex to model with other techniques, and we took the DPM. Moreover, as is described on let's say on this ISO scene, is provides a precise and complete and unambiguous definition of terms. So it's oriented to the data point. It tries to give a single piece of definition for each of them and try to make this link between the business and technical users. So this was two, I would say, important highlighted points for the data point model that were part of the reasons because we are using this methodology. You may see us on the screen. You have the annotated templates. The dictionary is something that most probably sounds to most of you in the industry. You already see our templates, our dictionary. So you have already, I'm sure, exposition to the methodology. However, on terms of the DPM as is defined by ISO is something that was covering a certain scope. Actually, was also the status of the methodology in 2012. So what we are actually doing in EBA and EIOPA is what we can call DPM 1.0 plus, because we are actually including there several new things that is not part of the ISO methodology. We have, for example, our conventions. The EBA and EIOPA have very similar conventions to do the templates. So we have also the semi-formal validation language, which is not part of the DPM 1.0. We are actually in EIOPA, for example, we use the keys, and EBA they are using other artifacts. So we have quite common DPM, but it's definitely DPM 1.0. It's going beyond the standard. Moreover, we are also having a big set of tools that are, let's say, our standard tools as part of the DPM 1.0 that are not defined by the ISO standard. So we have also, for example, a very common database representation. EBA and EIOPA, we are delivering all our reporting requirements in a form of a database based on actually on the DPM model, so on the concept of a model. And this is something that is part of our products, like we have also products for the one that you are familiar with. So what we are doing is not exactly DPM 1.0, but 1.0 plus. This is where, in terms of the methodology, I think we are sitting now. And then I will try to give you a little bit of overview. I know that this goes already a little bit out of the reporting. Here on the seminar, we have like two types. I segmented these. We have like, there is the reporting entities, which are banks, insurance, and pension funds. We have also software providers. And so both of you, particularly the reporting entities, are very focused on compliance, on reporting, while the screen is reflecting how is our process from the regulator perspective. So from the regulator perspective, and you can see on the circle, we are starting our beginning process of any request, let's say, is the definition of regulations that can be normally are in the forms of, in this case, what we manage is data structure templates. So in terms of data requirements, we have the templates, we have the instructions of the templates, and we have the Q&As. These are the three business artifacts to manage the reporting requirements. Once we have, or at the same time that we are drafting this, we are applying already a methodology. This is what I call now this DPM 1.plus, that we are preparing the modeling corresponding to these requirements in a data-centric way. So we have the use of a dictionary. Later on, the next step on our stream, we prepare the list of validation rules that comes also normally overlapping to the definition of the tables, but yeah, normally we prepare the tables, then we prepare the validation rules that are going according to the data quality checks that need to be applied to these tables. We prepare or we derivate from there, once we have what we call the DPM, we derivate from there the reporting formats. That is the taxonomy, the well-known taxonomy, the XBRL taxonomy. This is a derivation of our DPM modeling. There is a point of time where we have all the definitions on this common language where we derivate or we create the circuit change format. That is at the end the file, let's say the definition of the file that you are mandated to submit to your national regulator. Next step on the process of reporting, you have the data consolidations. This is where the undertakings are intervening. So this is where you need to prepare the data obligations, the modules, the reporting obligations, and then you need to do a lot of data aggregation and data consolidation in your stream in order to prepare all the information that the regulator is asking for. On this area is where I'm saying, like, so far is not much used DPM. So normally you are exposed, I will tackle later on, but you are exposed to processes that are maybe not really DPM driven, or you are not having this area, but you are more focused on the templates, more focused maybe on the taxonomy. So this is in any case the point of time where you need to prepare reporting. Once you have the reporting, both you start to submit to the national competent authorities. So we start on the area of the data collection operations. We have there all the complexity of sending files, sending resubmissions, all the part of data collection, where we have also the monitoring of this data collection, where we are ensuring that we receive all the information and that all information is complete. Once we have the information, we do data integration in our end. We perform also extra data quality checks, not only the ones that are, let's say, on taxonomy on first level that you are aware of, but we also do cross-report checks. We are also doing plasticity checks, so we do further quality checks on the data. When are going through the data fine, we do data transformation in order to make available this data for our business analysts to actually make use of the data for the supervision needs. Last but not least, we do the data dissemination. So we disseminate the data. This is the reporting chain. It's like you may have similar approach, but this is the classical reporting chain of a regulator. This, in terms of what we are achieving or where we consider that the DPM is useful for us, is almost in the whole reporting chains, particularly on the EBA. All these that I have explained, except the data consolidation that occurs on your end, is very determined or lead by the metadata that Mary was saying on the DPM. So we have all of this information where we lead all the systems as much as possible in a metadata-driven way with the DPM. What do we achieve? Well, I have put here a big set of things, but the DPM help us a lot on this process. So we are heavy users, like, because we can generate, for example, data entry forms. We are applying the accessibility policies, so you can do several things on the base of this definition of templates in a data-centric way. So you can develop systems in a far much automatized way. So we have all of these with all of these nice features that we consider on the data point model, and that's how we are doing. Actually, for me, it's also interesting. We are using the DPM is one option. There are others, as I say at the beginning. For me, it's interesting that when my experience when I have gone, let's say, to national regulators, I'm here in EIOPA for more than 10 years. So before we're actually using the DPM, there were different techniques. Some of them are standard, some of them are homemade by the regulator, but most of them are, let's say, achieving or trying to achieve this goal. So it's something for me interesting because we are not using normally very standard or general purpose tools, but we are using normally tools that are more oriented to regulatory reporting, to big templates, to big amount of data definitions. So for me, it's interesting that this world has been reinvented several times. We are using the DPM, we are happy, but there are also other ways to make this. Then I will go a little bit, have tried to explain a little bit what is the use of the DPM, the definition. So I will try to explain also a little bit of the layers, what I consider the layers of the regulatory reporting in terms of, let's say, of how much they determine the obligations and how much they are one below the other. Normally, you are expecting that lower layers are not impacting upper layers. I will tackle on this now quickly. But first, we have the legal requirements. So we have a set, as I said at the beginning, we have a set of legal requirements that we need to implement it. So you need to implement with them in a technical way. In this case, as was explained, we put the modeling. So we prepare the model that fulfill these legal requirements from conceptual point of view. There is not even a technical implementation that will come later, or transmission format. Then we prepare the validation. In this case, we have our validation language, or you may have some kind of validation language, because normally in regulatory reporting, you need to always do this type of validation. Like you have Excel formulas when you are reporting in Excel, or in another language, you have at the end quality checks. And then on the lower level, you have the taxonomy format. In this case, we took XBRL. So our current schemes, I put on the right-hand side. We have the regulation, the delegated acts, and then we may implement different artifacts, the ITS, the public guidance, or the BIOS decisions. We may implement, let's say, the legal mandate. We have the DPM. Currently, we have a semi-formal language between EBA and EIOPA in terms of the validation language. And last but not least, we have the taxonomy. I would say the importance was obviously up to down. One is low, the other are technical implementation, and normally whatever is saying on the DPM will be impacted on the taxonomy. So it's a little bit up to down, and you are expecting that the lower layers are not impacting the upper ones. So taxonomy is not limiting our model capabilities, the model is not limiting or not providing solution, let's say, to the regulator, to the regulatory needs. Where do we go now? And one explain this layer, I will tackle a little bit on XBRL, which I think is also relevant. Where we go now is that we are going to update these layers. We are going to update the layer in the middle, where undertakings may be only partially exposed, depending on undertakings, but we are going to update this DPM 2.0, the modeling, and we are going to tackle also on the validation. So we are aiming to standardize, and we are going to standardize in a formal way the validation language that we are using. Currently, as I say, semi-formal, have some gaps, so we are also including this as a part of the DPM, and there will be a formal validation language on DPM. Last but not least, both authorities are moving also on the exchange format. So we will move on XBRL and TCSV. That is not for, let's say, for today's discussion, but in terms of the transmission format, we will stay as we were from the beginning with the XBRL standard, which is our only transmission format. And the only thing that we will make change is that we will do, we will start to accept CSV reporting on the basis of XBRL. So there is a simple way to prepare the reporting files, but still in XBRL taxonomy. This is in terms of the layers, and then to finalize the explanation on XBRL and DPM, XBRL, as I say, is the technical layer, is the format that we are using for transmitting the files. It's something that is the package, let's say, that is technically used by the machines to prepare to validate the repos and to check its conformance. It provides already the taxonomy several features, so it's providing features on validation as well, features on dimensional characteristics, so it provides a broad definition. However, it's a little bit thinner or not provide all the things that we are including in the DPM. We hope we are working with XBRL to include more, but currently the DPM is a little broader. So I have here a little bit of a comparison what is on XBRL and DPM. And as I say, our goal and our discussions similar we are having not only on the taxonomy, but also on the CSV. So with XBRL, we have a close contact to evolve. And currently, there are certain aspects that you can only read from the DPM and are not present on the XBRL taxonomy. This is how the layer is structured, and this wants to reflect that the DPM in this case is the most complete view of the requirements. But then we start a little bit when I was explaining. We had quite a long common journey with the EBA for using DPM since 2011-12, since the beginning of the authorities. So we reuse a lot from our perspective of the product that the EBA was developing, like the database. There were several things that we took from them. And as May explained at the beginning, we realized that we like to do a review because we had common needs. We see also common gaps. We see also the authorities evolving to more granular data, to more data. So we had common problems to solve, and we decided to start with the projects. The main project goals, and I think we are happy to say that in my point of view, I think we are quite on the right direction in terms of the DPM 2.0. One of the common goals was to do a total convergence. As I said, there's also some difference between how we implement the DPM 1.0. So we want to have a completely convergence between the EBA and EIOPA methods. That the regulators, we are targeting both of our financial sector. There are very common groups, entities that are including insurance, banks, so software providers are providing service to pension funds, insurance, banks, completely cross sector. So we believe that we need to have a complete convergence on our methods that will the industry. So this is one of the goals of the Refit. Second main goal of the project is to do something unified and versatile. So we were working on the time in EIOPA. We had a little bit more of granular data from the very beginning because we report on the insurance, the daily of assets. So they were more granular in some areas than granularity in some areas than in the banking. But we still not. You can always, let's say, more granular or go to different needs. Then one of the goals that we had on this DPM is to be very versatile, to be very flexible. This we do it. We try to address not only our supervisory reporting cases, but we try to address also cases, for example, on transactional reporting. But we have some intra-group transactional reporting, but it's like very regular, normal. But we try to address also transactional reporting more from message to message reporting. We try also to address cases that we are not facing on statistical information. We try to address also things on master data. But we are using, we call master data, let's say, to the characteristics of the reporting entities of the companies. So this was normally not part of the data point modeling, at least not part of the most common use cases. We are trying to address also these cases. So we are doing a language that should be unified and should be more capable, more flexible to address regulatory reporting needs, because we consider that as more cases as better for the industry, standardization is possible. So we took also this into consideration. And when we develop, since the very beginning, when we started this 3-4 years long journey, we did also with the cooperation of the ECB that were also providing their inputs on statistical reporting. And we have also continued, not only the project itself was mainly EBA and EIOPA, but we have also cooperated recently with EBA on these areas of covering, for example, statistical. Next thing that was one of the main goals is to be content extensible and interoperable. So we don't want to be bind to any specific exchange format. Before DPM was some of the aspects very lead by XBRL in some of the areas. We try to go a little bit more agnostic on this sense, that the model is, as I was saying at the beginning, lower layers are not impacting higher. So we want a little bit more looking on for interoperability. We are also aiming to have content extensibility. So the model, in particular on regulatory reporting, we are working with financial business concepts, and the financial business concepts change across domains, change even across countries. So we need to have also content extensible in order to be able to reduce from other dictionaries and say from this element I'm actually dividing in other three, and I'm able to reflect that properly on the model. This and all of this, I think, is with the goal of at the end to have a semantic integration. Once you have the model, so once you are, Carlos will tackle later on this, once you have the syntactical layer, you are using the same pieces of business concepts to define, let's say, the reporting requirements, what is the business concept that need to be reported. And once you have the technical layer, use the same technical artifacts to provide these definitions, is where you open the door to have a business discussion on the semantics. So you open the door for different regulators to try to agree in common definitions for the very similar elements, or at least to define a common glossary where the differences are stated. So that's the 4 core elements that we have on the Refit on the long term to open the door to this semantic integration that can be, from bank perspective, can be also in cross sector like bank and insurance, because obviously we need to serve business concepts. And then in terms of the key features, well, as I a little bit explained, we have prepared the DPM 2.0 being very agnostic, not change to any particular language. We are focused also very much on rendering. For us, the rendering, like for statistical and transactional, you really are open tables in general, so you don't really have an important meaning or feature of the rendering. Is, let's say, simpler. In our case, we have very complex templates with very complex rendering that corresponds to how the business user wants to see the information, and this needs to be properly reflected on the DPM and the requirements. And this is one of the challenges that we have when we are doing our supervisory reporting in our scope. Next thing is historization. We are the DPM, and it's, I think, one of the reasons because regulators use DPM and industry use less. I think it's because on regulators, the historization of the elements is extremely important. You are changing, of course, the regulation and taxonomy every year, but you need to consume the information very good across the time. So to know which piece of information has evolved differently on different points of time, and to be able to automatize the consumption of this evolution is extremely important for regulators. While in undertakings, I mean, of course, you need to adapt systems, and you have the big challenge of preparing the reporting. Are more based on a snapshot. So you report the model the next year change. You don't keep the system having the whole track because you prepare for the new reporting. And this is also, I think, one of the reasons because we use DPM, and one of the reasons because for undertaking sometimes to prepare resubmissions, depending on the system how they are developing, but it's so costly when it's a resubmission from, let's say, a few years ago, because systems are moving more on up-to-date basis, and you don't have so much funding. So this on the DPM now, we had some gaps on the past. We are now focused very much on historization. I already explained, need to be unified, single model to supporting all the types of use cases of data sets. Versatile to different approach of data requirements definition, and to have or to help on the complex cycle. So what I explained at the beginning, the new DPM should even go further. There were aspects before, like the master data, or aspects that were going to other systems, not exactly including DPM. We are trying to push there more metadata to able to cover most of the need that a regulator has in this case for the data reporting. But I think I'm more or less reaching my end of the first slot of the presentation. We have published, as I want to really explain, we started like 3-4 years ago. It's a long process, it's not easy. There are very long discussions to prepare this. We have published already the package, so the DPM, most of the package is already there, but the core part, the most important part, what really matters, let's say, is already published. We are including like I put there 8 building blocks. So we have the new definition of all of these aspects of glossary, of identification of reportable values, relationships, rendering, how we are going to link this to regulation, how we are doing the package of the frameworks, and even on lower level there was also together to this to a new taxonomy architecture. So there is change coming also together on packaging, the historization, and the validation calculation rules. All of these is already public. It's a documentation there, and it's for use. And we are already training and explaining to the national regulators. So it's also for public use in any case for everybody. It comes also together with some technical documentation and a fact sheet, so it has a little bit more. there will be another two annexes coming. One is related to the interoperability, and on this I'm referring more to exchange of metadata, and the other is related to governance. We are working on the governance. In this case, it's not only or mainly EBA and EIOPA. On this, where we are working together with European central banks to do a common governance of how we are going to update our models and how we are going to the DPM in this case from a methodological point of view. And I'm facing my last slide. Before going, Carlos will go a little bit more on the details on the different blocks of the DPM. On my last slide, I want to focus a little bit on your end. So because today, as I was explaining, I think it's more from entities perspective, how the reporting is set. And we are publishing, as we explained, the regulation, the DPM, the variables, which are formed by database and by annotated templates, and so on and so forth, and the taxonomies, the XBRL files, these files that are actually defining the specific transmission format. This is the products, and then on your end, you have also different types of solution. I classify on 6 types that, depending on your type, you may have different maybe facing different difficulties and have facing also different benefits or receiving different benefits on the regulatory reporting. One is that you have reporting experts, let's say business users with IT technical specification reporting. I don't think this applies really to us. Theoretically, can apply, let's say, for, I don't know, more simple reporting and maybe people that are still reporting, I don't know, in Excel files on very plain CSV, but in our scope, I don't think that no one is able to do that. XBRL is sufficiently complex to and not convenient. Moreover, I don't think that this is the best approach, but you may have business experts trying to do it by themselves. Normally will not be applied. Other option is you have a software from the regulator. This in EIOPA we were using, for example, for a few years. We were making available a tool for entities, was used on the time by close to 25-30% of the market. So about 1,000 entities were using the tool. This is another option. We in EIOPA we decommission this tool because we consider that this is more for commercial software. But option is still being used by some regulators. Third option is you have a commercial software provider. So you buy a tool, which is very nice. There are very nice tools. We have like 40-50 tools now on financial sector. They are very good because since EBA and EIOPA share quite a lot of the standards in terms of the DPM and XBRL. Before it was like quite separated, banking and insurance and pension. Now it's a little bit mixed up. There are companies that for the same cost, let's put it like that, they are able to support the banking package and the insurance. So there was some good offer there, and you have very good commercial software for buying. Next option is you have an internalized automatized IT development. So this I will say is the one that can be more benefited for this call. You may have a team in your end that is preparing the regulatory reporting and the process. So based on whatever, some of them, I'm sure, I'm afraid that you may still working with some Excel files, but some of them will be more IT driven. But you may have an in-home solution that produce automatically, almost automatically, the reports, which is a way to prepare it. Last but not least, there are another 2 options: subcontracted automatized IT development. So you have something similar, but it's a little bit more someone else. We don't have really the know-how, and someone is preparing this. And then the last option is you have a consultancy in hand. So a consultancy company take even all your full data sets and prepare the reporting. These are the 3 elements, or the 6 options. I think, as I say, I think all of them are very nice. In terms of the DPM use, just to conclude, the likelihood that you will be exposed to DPM there is at this point, I think, very low. At the end of the seminar, we'll have a company presenting that I think is using DPM, but this is definitely not the common case. I think this responds to several reasons, but depending on the use case, you may have more chances to use DPM. I would say the commercial software, for example, well, software from a regulator will use DPM, the DPM database to create our tool was the easiest form. Software from regulators, there are many software from regulators using it. They are also using some of them taxonomy, and some of them they are doing from scratch, let's say from regulation, but they are having chances to use the DPM. In the other 2, normally we are very low, which may make sense. But today, one of the goals to explain is why we are using DPM, and maybe, or could be an option that you are aware that if you are, let's say, on this internalized automatized IT development, you may want to have a look on more detailed look on this modeling and these products. And I think, having said that, yeah, sorry, I will pass the floor to Carlos, that will go more details on the package for the DPM 2.0.
Thank you, Aitor. I think that just before Carlos take the floor, I think we are quite on time with the timing and the presentations. We had just one comment on the ISO that was included in the slide 3. I think there is a typo. It is confirmed that the correct ISO code is the one that you have in the chat. So there was a small typo in this. All questions are somehow, the first question was on the potential use cases for the DPM for business analytics or business intelligence. I think you already answered. I think it's good that we progress a little bit more in the workshop to have more oversight on what can be used, and also especially the use case, and also on the discussions that were in the chat about the use of the XBRL and the reporting tools, and whether this is we have a recommendation for a specific software. I think you also, your last slide precisely went into this direction, different approaches, but we are not here to suggest any software. Of course, I think that you answer also the possibilities to use XML, XBRL XML will be still possible. So because this is agnostic to the technology. Just to, there is a question on IRF that I think that is a good moment now to introduce Carlos Martins, the coordinator of the DPM Refit from the EBA. He might have already some reference to the IRF and the relationship with the DPM 2.0. So I give you the floor, Carlos, and maybe you can already, or in the course of the presentation, refer to it. The floor is yours.
Thank you, Daniel. Good afternoon, everyone, and thank you for being here. I will leave the IRF topic for the second presentation, and let me now share a slides. So I will focus now more on the DPM metamodel itself, explaining a bit the characteristics of the DPM and the evolution from DPM, the current one, 1.0, to the DPM standard 2.0. So starting with an overview of the current DPM, which we call now DPM 1.0, just to distinguish from the 2.0. In terms of the qualities that we consider associated to the DPM, to the current one. So we have comprehensiveness, since the DPM covers all data that institutions require to report to authorities. So we've been growing, as you will see later, our reporting frameworks since over 10 years now, and everything is included in the same DPM. It's consistent because all the definitions are linked together, referring to the same set of glossary terms. This helps to ensure that everything is uniform and data is reported in a uniform manner. The structure of the DPM, as you already know, is a highly structured model supported by a database, and is defined by combination of multiple dimensions, which provides the semantic meaning to data. And it's also mapped to the template coordinates. So it shows the representation in terms of the original business templates, and it gives also the meaning in terms of the modeling that was done by the experts. The flexibility is another important quality to highlight, and exactly because it's a very adaptive model. So we've been using it for many, many different use cases, and it's still the same meta model. It did not evolve much from its inception in 2013. Now, of course, we run this profound review, which we call the DPM Refit, and from which we derive the DPM 2.0. but I'm talking about the original one, and all of these qualities apply to the original DPM. In terms of the building blocks, we can distinguish 4 main building blocks. So we have the business glossary, which are this group of entities in the metamodel that define the business concepts that are then used to model the data. So the ones of you that are more familiar with DPM, you will recognize there the domains and dimensions and metrics and members and hierarchies. All of this is used in the process of data modeling. This is what provides this semantic meaning to the data, which otherwise will only be defined by the templates. But the templates themselves are also included, the structure and the mapping to the data points are also included in the DPM, together with the definition of the frameworks and the modules and the composition of the modules. So all of this is also included in the DPM. So you have this double, let's say, nature of the meta model, providing let's say this positional reference of data and also the dimensional categorization of the data points. So the data points themselves, of course, they are there, defined. This is actually the outcome of the process of data modeling, is to model the templates using the glossary and automatically derive all the data points that are part of the different reporting frameworks. And finally, there's another area which is a bit, let's say, different, but is also included, which is about the validation rules. So these are those entities in the model that describe which rules are applied to reporting, which of course then are run to check the accuracy of the submitted data.
You are mute, Carlos.
Thank you, Pilar. I don't know what I clicked here. So I hope not muted for very long.
No,
so
it was a question of 1 minute, if at all.
Yeah. So in terms of the capabilities of the DPM 1.0, so it supports different types of template structures. So we have closed tables, open tables, semi-open tables, more granular data, less granular data. It's a very good fit for definition of data aggregates. It's also capable of representing granular data structures, and you know the reporting framework, so you know it contains both highly aggregated data like balance sheet, and also very granular reporting or much more granular reporting like large exposures, for instance. It supports relation rules. It contains versioning features or historization, both at the level of templates and at the level of data points. So these two are completely historized over time since in the EBA case since 2013. All the history of all different versions are there, and all of them can be found in the same data dictionary. Now, there are a couple of some shortcomings, which is actually why we embarked in this huge revision of the DPM. So one of them, which is quite important, is the current model is not able to represent table relationships. And when we move from the business use case of reporting aggregated data to something different, more operational data or master data or whatever is let's say more close to granular data with complex relationships. This is something that was missing, and of course there are use cases where this might be required. So this was identified, and this one of those that are addressed now in DPM 2.2. Another thing that was missing was the historization at the level of the glossary. So the glossary again is domains and dimensions and members. All of those currently in the current DPM are not versioned, which is also a challenge because sometimes the glossary needs to be reorganized, and this becomes difficult with the current DPM. There was no support also to decompose complex members into other members that can give a more complete meaning to this. You will see it later. The data model itself inherits some of the original DPM limitations. So historically, there is a connection, even though the DPM now is a very different use cases, but its origin is linked to supporting the DPM, the XBRL production of taxonomies. It doesn't also support concepts of ownership, which of course is important when we think about using it for cross-sectoral in a cross-sectoral environment with different authorities using and managing the same data dictionary. In terms of the common use cases, we've been using it for 10 years for supervisory data, both at EBA and EIOPA. We also use it for resolution data for quite some time, and other types of regulatory data. So let's more, let's say, easy frameworks, but we have a number of them, as we will see later, many actually. In the meantime, we have done the DPM refit, as I already mentioned. It was an effort of 3 years since early 2020, and then this was published in July this year. You can find there the documentation of the metamodel. You can also find documentation of the validation rules and transformation language, which changed a bit, and I will also come to this later, and other supporting documentation. So what are the enhancements of this new DPM 2.0 metamodel? So in general terms, the metamodel now is it's simpler. It's much simpler, and at the same time more fit for purpose. The reason for this was that the previous DPM, even though at the core didn't change much, but new entities have been added over time to address new specific needs. In 2013, we were dealing with a couple of large frameworks. Now we have many more. So there was a kind of adaptation without any review of the model, and the end result was a kind of some decay of the metamodel by adding more entities, whilst others would become a bit obsolete and not really restructuring the whole thing. We have changed the terminology of the metamodel to avoid misunderstandings, because while many entities are very close between DPM 1.0 and 2.0, in the end they mean different things, or they are slightly different. So to avoid confusion, we changed terminology. So in terms of the block of report packaging, this was completely redesigned. It's now more flexible. We have more control in defining the template structures. Versioning is at a level now even of headers and individual cells. and the modules are also versioned now in terms of their composition to facilitate understanding of changes. The business glossary also has a lot of changes. So we are now in the new DPM 2.0 able to define composite items by means of combining more elementary items and their properties. So this is very useful to explain certain concepts which in the current DPM appear as a single member, but then they can be decomposed into more, let's say, atomic elements. The data modeling is also very different now because we evolved from adding just the concept of data point to the variables that extends this concept. Now we have the fact variables, which are fundamentally the same as data points, but also we have the notion of key variables and attribute variables. Key variables, of course, are to be used in open tables, and attribute values are used to qualify certain fact values of other values, like if we want to provide a comment on a value of another variable. The categorization, which in DPM 1.0 is applied at level of each header and row and sheet, now we can also apply to the whole table, which makes it also simpler and avoids the case where we are applying some dimensions to the whole set of columns or rows, even though they do not explicitly define each of those, but the whole thing. Global variables have been also introduced. You can assign it directly to the whole module, like to define variables like the reporting period or the entity and the scope of consolidation, for instance. Relationships are one of the main new features. They are now defined via keys, primary keys and foreign keys. These are now explicit. And we also include concepts like generalization, specialization, supertypes and subtypes, which are needed in some use cases. The model of operations, this one is it's completely new. This was probably the one that suffered the more radical change, and it's something that can now be executed by machines. The model can represent validations or calculations, so in general transformations, in a way that is very let's say flexible, can apply to almost everything, because we are using abstract syntax trees to define the transformations. So the operation metamodel is the data of this operation metamodel is populated automatically from the business validations, which now have also evolved in terms of syntax. And this is actually one of the reasons was to make this process more automatable. So we have a new syntax, which does not differ too much. I will come also to this later. So then, okay, there are other aspects in the model, like dealing with translations, dealing with the ownership of individual elements of the metadata, and the management of releases, which was also very much improved. So now the capabilities of the new DPM, we can support different types of data and any level of granularity without a problem. We can support different types of modeling approaches, because while the EBA and EIOPA we use a certain way of modeling data, If we come to the area of statistics in DCB, the approach is different, but the model is able to cope with these different ways of modeling the data requirements. The versioning now is applied everywhere in the model. Complex relationships of data glossary elements are also a new feature. The supporting calculations and expressions in a much better way, and especially the calculations to allow data derivation, which did not exist before. And the metamodel for the operations is now a very powerful one and machine readable. So the use cases can therefore extend. So as new use cases that we envisage are statistical data, operational data, master data, registers, notifications and incidents, and many more possible use cases. Just to give you a brief idea about how these concepts from 1.0 and 2.0 relate, I told you that we actually changed the terminology completely, deliberately, just to avoid confusion and people thinking that it's exactly the same, while sometimes it's not completely the same. So to give you an illustration of this, some of those are actually quite direct. So a module is really still a module, even though we had in the current DPM module and conceptual module, now they're just a module. The table is still a table. Template, you don't find it as an entity in the new model, but it's a kind of a special type of table, kind of an abstract table. And then there are things like relationships and keys in the DPM 2.0 that have no connection to the previous one. Headers are what we used to call ordinates in DPM 1.0, and axes are actually one property of the header. In this case, we moved from having one DPM 1.0 with the possibility of having many multiple axes, which in the end, we thought, okay, this is not really interesting, because when we think about templates, they're always three-dimensional. So you can represent them by columns and rows and the number of sheets, which can be fixed or not, but it's, let's say, a three-dimensional type of structure. Cells are still cells. The domains now are called categories, but they are very much the same kind of concept. Now, dimensions and metrics, both of them are properties. While before, a metric was a special type of item in DPM 1.0. The members of DPM 1.0 now became items, but dimensions must also be referred as items for practical reasons. I'm not going into the detail now. But dimensions are also a special case of items. Items are anyway all depending on a property. Composite items are something new, did not exist before, and the hierarchies of the DPM 1.0 can now be found as subcategories, which might be flat or have a hierarchy. And data points are now variables, but the variables are not exactly the same as data points, because they include other types of data, as I mentioned before, keys and attributes of other variables. So about business rules language, this is not exactly, let's say, part of the DPM metamodel itself, but it's something that we also evolved. This is the syntax that is used by business experts when they define the valuation rules. So the current one, the one that we've been using for the last 10 years, is semi-formal, but not completely formal. Doesn't have proper documentation. So there are a number of issues that derive from there. So on one hand, it's difficult to automate translations to other language. So for instance, you need to translate these valuation rules to XBRL formula. It's not, let's say, a very clean process. It needs to be adapted every now and then when some new rules appear. There are some differences in usage. So, for instance, at EBA, the syntax is not used exactly in the same way as EIOPA. So this complicates, of course, especially for people that need to deal with both types of validation rules. So does not facilitate understanding. And also it's more difficult to extend because we are missing some solid foundation. One case for this is operators, which are a bit inconsistent. In some cases, there are more than one way to define the same thing. So this is why there was also focus on defining a new syntax for the expression language, which we call the DPM XL, or expression language. It's still based on the current language. Actually, you'll find it very similar, but there are some improvements which make all the difference. So now it's a fully format language, and it allows the syntactical and semantic analysis to check the correctness of the expression, which of course we were already doing, but now it's much more simple to automate this. We can have fully automated translation to other languages. Again, XBRL formula, but also other languages like VTL or SQL or whatever. And it's much easier now to build interpreters that can execute the rules as written. So this is actually something that can be machine executable. Let me give you a couple of examples. How did they look in the old syntax and the new syntax? So you see here this validation rule 175. It applies to table C01, column 10. This table has only one column. So this is basically something that in the DPM 1.0 we use to define what is the scope of the validation. So defining if the expression applies to the whole table, then you put this in scope and columns or rows. Then there are a couple of other attributes, which is how to deal with missing values and whether the interval arithmetics approach is applied or not. And then you have the formula, which in this case, it's a very simple formula. It's like A equals B plus C, and that's it. So in the new DPM XL expression, the formula actually did not change at all. What we have here is the inclusion in the expression itself of some metadata, which before was not in the formula, but was dealt as properties of other entities. So the reason for this was because we thought this was important to have everything that defined the formula, that defined the validation in the one single expression, exactly to be able to support then more automation, etc. So in this case, you see that the change is basically what is in scope was now moved into the expression itself. The formula is the same. We have here another case where in this second validation, you can see, by the way, that some improvements, like not allowing spaces between the table codes, for instance, facilitates also the automatic manipulation of the formula. But in this case, it's still the same formula, but there is a where condition, which in the current or old syntax was defined in one way, so something in square brackets, and now the syntax is different. You have a where condition, etc. So of course there are many other examples of this, but you see the picture. So it's kind of a small changes, but make the language much more formal. Now let me tell you briefly about the operations metamodel. So this is the part of the model which where the metadata is stored. So from these DPM Excel expressions, data is extracted and automatically loading the metamodel. Let's take one logical expression, a very generic thing, just to say we can represent any kind of formula or algebraic expression into an abstract syntax tree, which is basically a sequence of nodes and operations, and then moving to the upper levels until finally you get a result which is, in this case, either true or false. So either f is equal to the expression or not. So this is basically one way of representing the formula in terms of an AST. Now, how do we store this information? The metamodel in the DPM is quite simple for this. This is only the code, but it's quite simple. Basically, an expression is a collection of nodes, and these nodes have a hierarchical dependency. And then some nodes actually link to operands, which are the inputs for the expression. And each node, which is not at the leaf level, also has an operator with some arguments. So that's how it's represented. You see here a picture of the whole DPM2 model. So one area for the core DPM modules, templates, the glossary, the variables, and then the operations metamodel on the right top corner, and then at the bottom another part, another block which deals with generalizing the concepts and associating to owners, allowing translations, allowing legal references also to be linked to the concepts of the DPM.
Carlos, just conscious of the time because we are now past the time. One question was specifically what is an example of where the meta model of the DPM 2.0 is simpler. So maybe we can focus on that and just remind you that we have a few questions at the break. Should have started 4 minutes ago.
Yeah. Okay. So let me just briefly. I think Aito in a way already mentioned this. So what are the use of DPM across the reporting lifecycle? Data definition is the first one, of course. Then from the side of institutions, there is a data aggregation reporting process where DPM will provide the reporting requirements. This can be automated. And I think in the last presentation, we will discuss this. So our colleague from Erste Bank will go into this in detail, which is very interesting presentation. And then we have all the other stages of the life cycle: data collection, the validation, the storage, data derivation, data preparation, analysis, and dissemination. So I'm not going to read all of this, but you will have access to the slides. And for each of those, there is actually a case for the use of the DPM. And it's not theoretical because that's what we are doing already at EBA. This is the last slide, I believe, which is about the tools that we also need to manipulate and to use the DPM. So we have started a joint project with EIOPA to develop a tool that we call DPM Studio, which is used to define data requirements and basically to manage the releases of the data dictionary. So this is a tool which will be used by regulators or competent authorities that actually need to issue some reporting frameworks. And for this, they need something that can update the DPM meta model, which is not something that you can do manually, of course. We will have the first release an MVP, minimum viable product, which will be ready by end of this year. It will not contain all the very important features, but it will contain a set of features that allow already that we start using it in production. So from beginning next year. And then we will continue to develop in 2024 because there are other features that we need to include there. We have another tool planned, so we have not started anything yet, which we call DPM Explorer. And this one is a different tool because it's aimed to give to any stakeholder that needs to use the DPM, understand the concepts, navigate through the data dictionary, a way to do it. I mean, the model, even though I said that it's much simpler and cleaner, it's still too complicated for something for someone who does not have a deep understanding of the structure of the model and also the skills to interrogate a relational database, very complex. So this tool aims to give to anyone the freedom to go through the content and understand the requirements. Is not done yet, but we are planning it for 2024. And I believe that this is the last one. So, Daniel, I think you mentioned there are some questions.
Yes.
Okay.
Yes, there seems to be a burning question for a bank already reporting XBRL. Example, FinRep or Corep. What is the impact of this DPM 2.0? And all the other questions, I think more or less they have been already answered by Aitor, except the last ones on the tools. What programming language are those tools going to be written in, and if these tools will be available to the public? So I think these are basically the two pending ones. Most burning is the first one. So yeah. What is the impact on a bank already reported in XBRL?
Right. I will actually address this in the second presentation. Let me just tell you. So we will start the transition from the current DPM to the new one. But at the same time, people will still report using the current XBRL XML until finally we discontinue this and move to XBRL CSV only. So there will be a transition period. We will be publishing both the old DPM and the new one, so like two flavors of the same thing. Of course, the one is richer than the other one, but this is to allow people the possibility, of course, of adapting, and also ourselves. So there is a transition period for this. Anyway, the impact, direct impact, there is no impact if depends very much on how we are doing things, right? So if you are preparing your reports based on the DPM, which would be really a good idea, you will have an impact, of course, but then you have also time to adapt to the new one. If you are not using the DPM at all to prepare your reports, it's a pity, but then you will also have no impact and no benefit from the new DPM. So in terms of sorry, it was tools, the second question, right?
Yes, this on the tool, what programming language, and this the language of the tool, the DPM Studio, basically, and I think that Aitor is coming to it. So I think that if you are going to expand on this last point in your second presentation, I think it's the right moment now to do a break, 10 minutes break. I already discussed with Aitor that we can shorten the next slot, so we would be in time. I think that the 10 minutes gives us the time to go and stretch the legs, grab a coffee, and continue. So we will be back at 3:30, please. Thank you, Carlos.
You're welcome.
Hi. Welcome back all. 3:30, as we promised. Now I will hand over moderation role to Pilar, Gutierrez from the EBA, so the head of the Reporting and Transparency Unit, and the floor is yours, so you can introduce the rest of the agenda.
Thank you very much, Daniel, and welcome back to all. So we will start now with the second part of the agenda. In the first part, Aitor set the scene, explaining what is the DPM standard. Carlos explained the evolution to DPM 2.0. Now Aitor and Carlos will explain the use of DPM 2.0 in the insurance and pension fund sector and in the banking sector. Aitor, please, the floor is with you. Thank you.
Thank you very much, Pilar. Yes, I will speak. Let me share my screen. Okay. I will try to go. I will go very quickly to now on this slot, just 15 minutes. In EIOPA, we're still having to prepare several things on our way to the DPM 2.0. Moreover, Carlos will have more interesting topics because on the banking side, there are more things going on with integrated reporting. So I will try to keep a little bit short update on the EIOPA part. We did in EIOPA and more oriented to insurance now and pension funds. We did quite a long journey. So since the beginning that we have only Solvency 2, now we have many more frameworks. On this way, we have also included reporting solution and tool undertakings. I think, particularly in terms of frameworks, becomes very, very big. So it's going to fit very well the DPM 2.0 on this evolution because actually it's much more demanding in terms of features than we were having when we started on DPM 1, the development. So the journey has just started. The last framework is FICO, and we have published it a few months ago. Where we are now, we have a common dictionary in EIOPA. In particular, you have a very centralized where we include, well, not only on the frameworks, but in the case of EIOPA, this were one of the things different that we had with EBA. In the case in EIOPA, we include also master data because we have some areas that we include. And we have developed in the same way that similar way to EBA, data-centric and a single dictionary for the whole reporting obligations, which includes not only insurance, but also pension funds and also the ECB reporting add-ons. So in our case, when an insurer or a pension fund need to report to both to EIOPA and statistical reporting for the ECB, reporting for the ECB, they are including a single file, both things. So the dictionary is including also this area. We are very happy to have this centric approach. It was actually a first test. I'm recovering now here a slide. This slide is very old. I think it's 2012 or 13. It was at the beginning on the DPM. I recall that before we adopted, and actually we took as much as we could on the time from EBA. And this is, I think, one of the reasons because we are here, because we adopted the same methodology. One of the things that was on the time discussed is just the DPM will help to harmonize the different definitions. So there was this slide like combining the areas that we're having on banking and insurance. So today I say, okay, I maybe take it because I think this it has taken time for the insurance sector as well, but I think it's the point of time where we may start to work more on this level, cross-sectoral definition and this single dictionary. As I say, we already have something with the ECB, but now we will go beyond. Currently, in terms of the DPM deliverables, for the ones that are not familiar, or I will say originally, because now we have a change on the tooling. Before we were using one tool that we call tool for supervisors. That was part of the solution that we do for undertaking. The tool for undertaking, we had an internal solution. We're creating our deliverables, and we're creating the ones that I have, the main deliverables that are the ones that I have in the screen, together with the DPM database, of course. But at the dictionary, the DPM dictionary, the annotated templates, and the validations, and they were providing a lot of information. I will maybe highlight the part of the annotated templates that were resembling very well the business templates. and also the way that we're indicating the change. Now, currently, we have a much mature and I think several ways strong approach, which is we are now using another software solution, that commercial software solution in this case, and we are providing the deliverables in a little bit different way. So now we have the annotate templates, which are providing similar information as before, but I think also a little bit more, because this time are generated from the DPM database. So and this is also the case on DBA. So they are a little bit facilitating also our maintenance, and it's also in the process, let's say, to leave Excel stream that we are also on the way. At least as let's say, as a main technical artifact. So we are more database oriented as we believe that need to be done. Then we have the dictionary. Dictionary is very similar as before, not major change. So that's the current product that we have. And last but not least, we have the validation. We also did some evolution, because before we were using this common system with EBA. Now for a few years we will be, and we'll tackle on the next slides on this. For a few years we'll be using a little bit different syntax. This is the language that appeared there on the validation expression, and even the columns as well. We changed a little bit how this is packed. We changed the language, and this is another aspect that we will tackle now on the DPM Refit, because we are start to use the validation language of the DPM 2.0 in fully harmonized way with the EBA. So that's also where we go, generated by DPM Studio. Currently, we have this presentation that has been an evolution from the 2.8.0, so relatively recent for the insurance sector. And then we have the database, which also had a little evolution. We took, as I said, the database from DBA. I think was one of the, on top of the DPM, I think was one of the very good decisions that we took on the time, not to only take methodology, but also to copy the database. We had to do some adaptations for EIOPA needs, but it's mainly basically, let's say, or conceptually the same as DBA. We were publishing on SQLite in a specific format. Now we still publish on SQLite with a different, slightly different structure. We had an evolution to 2.8.0. We are removing some of the things we consider less useful, and we are including others. So these were also part of the change that we were having upcoming, because this actually is the first years of implementation in EIOPA. Last but not least, we have the detailed list of change that is, I heard recently. We have in EIOPA, we have, I think, quite a detailed list of change. We are now evolving for the detailed list of change and some validation. So there is this kind of Excel file that provides only the delta, which I heard recently that was one of the most useful artifacts for reporting entities. So for, in this case, insurance and pension funds. And they were actually using frequently, and they're asking for it. And I would say that there is ask for this detailed list of change, which is convenient, because you have in an Excel file line by line, this template has been modified. It's only the thing that has been changed, or the modeling part. So it's for a human being is very convenient. But if you are DPM, you are reporting, let's say, based on the DPM, most probably you will use the DPM database, and then these Excel files will not be so useful, because all of this information you will have on the DPM database. So this is also shows a little bit where we go on at the end on the long term, and we believe that yeah, at least for the undertakings that are interested, they will still have the data for change. Last and not least, to go also trying to recover time in terms of EIOPA transition. To be very clear, we're still having to make our main decisions. I was also explaining today to the sectoral meet to market with the insurance this morning. In EIOPA, we're still having to decide what are the specific timelines. This is not in stone, it's tentative timelines, but we have a little bit of idea what will be the approach. First, we aim to start with a pilot of DPM 2.0. So we want to do a publication based on DPM 2.0 that will be only for reference, will not be for reporting, it will be only for information for the industry and all the interested stakeholders. So this probably will happen in the 2025. So like in 1.5 years time, we expect to have this new DPM 2.0 implementing all the products and release it, this POC. Then we will have a second year where we will do the, we will include also CSV most probably, or we still considering at least for reference to be able to accept it as a complementary to the XML. And on 2026, we will repeat the same thing, or new release, but in this time will be next step will be for production. So we do the swap to the DPM 2.0. We may be still publishing some information on DPM 1.0 just for reference, let's say for undertakings that may still attach to the other. But what we are going to request in terms of the products update, let's put it like that, will be the DPM 2.0. We may have we should have a review of our dictionary, of our glossary. So there will be modeling change, and we will go with the DPM 2.0 for production at this point. Last but not least, because this will happen still with some tools, last but not least, we aim to change to the DPM Studio on the still phases approach. And to be confirmed in the very, still not plan on the roadmap, we may fetch out XML based reporting for XBRL, because even XBRL consider that the future is CSV, so we may go only with CSV OIM. That's the 3-4 steps that we have in plan. As I say, the time is still to be under discussion. Actually, over these weeks we are discussing that. Yeah, this was the. I don't know if there are questions for specific for insurance. Otherwise, we.
Thank you.
We will cover the time.
Okay, thank you very much, Aitor, for the very concise but very clear presentation on the use of DPM by EIOPA and the artifacts and the tentative transition plan in EIOPA towards DPM 2.0. I don't see any questions. If anyone has any question, you can put it in the chat. Could you please elaborate? So we have now a couple of questions. Could you please elaborate on what is to me the benefit of using CSV instead of XBRL? And also a question on the future use of XBRL XML.
I will.
Yeah. Okay.
Yeah. Well, first to clarify, CSV is still being XBRL based, so technically it's called OIM in XBRL terms. CSV will still be part of XBRL. It's simply the representation. So when we speak about the file that is sent, transmit, currently we are using XML. XBRL is XML based, so there is a standard there, and then you open the file and you will see a lot of tags and annotations. We are moving out from there to the CSV, but we are still in XBRL. Both cases are still being XBRL. On the CSV, for the one that you are not so familiar, is just a place we call file separated by commas, so similar to an Excel file with comma values separated by commas. Just to put a little bit what technically we mean in both cases, but it's XBRL. In terms of what are the benefits, are several benefits. One, I will say for me, the most valuable is that it's simpler and more performance. So we'll take less space, will be better to consume, easier to create, better to consume, particularly for making validations, for example, to perform the validations will facilitate, and it will take also less space. I think are almost all benefits. What will be what was the reasons why we then took it in advance? Well, I think was part of the XBRL development was developing this specification. Now it's there, and I think it's more or less clear for all of us that we should move. The current XML is extremely verbose, takes like, I'm saying, like more than 20 times more space, because there is a lot of information that we call metadata that should not be there. So for us, it's a clear step forward.
I think there is a question on the EBA use, but maybe Carlos, you will answer the CSV XML question in the EBA when you present. There is another question. Would you be able to elaborate whether the supervisors, authority receiving the data are required to undertake any steps related to switching to the XBRL CSV format and the potential impact on submitting institutions? Entities.
It depends on the authority as well. In EIOPA case, for example, and I think it's the same. The same. In EIOPA case, we are going to accept for sometimes XML and XBRL. XML and CSV. In both cases, XBRL, but the two flavors, and eventually we will change to CSV. In practical terms, for the technical people working on that, I'm only see benefits to CSV. So I have the feeling that as soon as people start to use it, everybody will phase out because everybody will want to move to CSV.
Okay, very good. Any plans for XBRL, Jason?
CSV actually includes a little bit of JSON. We are following the specification there on XBRL, so we call it XBRL CSV, but there is mapping files that are are in JSON. So
Okay.
the plan is part of the plan. Let's say, put it like this. It's already part of the plan to work with JSON on the mapping files.
How many countries are using the XBRL right now? I don't know whether
Most
this
of
is
them.
a
I know
okay.
we asked in a recent, 2 years time, most of them. I think there are only 2-3 countries in terms of banking and insurance that are not accepting. There are some countries that are accepting more than one format, but not accepting XBRL. I would believe that only 2-3 countries in Europe are not accepting XBRL for reporting.
Okay, very good. Any other questions? Otherwise, I think that we can move to the presentation by Carlos on the banking use of DPM 2.0 in the banking sector. Thank you very much, Aitor, again. Carlos.
Thank you, Pilar. So, okay, let's see now about the DPM usage on the banking sector and also something about the future. So we started in 2013 defining our first release of the EBA framework. So back then we have like 7 frameworks, 2 large ones, which was COREP, OFLR, and FINREP, and liquidity also. And all of this together represented a bit over 30,000 data points at the time. And now, 10 years later, we have gone through many releases, and what we have now is a large set of different frameworks that all use in the same way the DPM as the means to define the data, so the data dictionary. We see included here, for instance, resolution reporting, which come later, and even more recently, reporting for investment firms. And now the total number of data points that are currently active is close to 100,000. So it grew like 3 times in terms of the data definition supported in the DPM. But then again, as I explained earlier, we keep all versions of all releases, so all the history is tracked there in the DPM. Okay, now going directly to the transition from the current DPM to the new one. Until end of year, we are going to complete the DPM Studio MVP, so the minimum viable product, which means having a tool that can be used in production, even though still with some limitations, not with all features available, but just enough to replace the current process that we have with the DPM 1.0. There is acceptance testing from users going on. And then from early 2024, we will then start using the DPM 2.0, supported by the DPM Studio, in production. We will continue to develop the DPM Studio, as I mentioned already, because we need all the features that are considered to be a must and will not be delivered already by end December. Same time, the EBA is running a review of the DPM. We call it DPM quality review because it's looking at the content, so not the structure, that we've been discussing, but the content of the DPM, which of course has also been evolving over time through these last 10 years. And it's about time to do also a revision of the semantics of the. It's mainly about the glossary, reorganization the glossary, including descriptions that are missing, etc., etc. So we expect this to be then available by mid next year. And then this is where we start the transition phase, available also to the industry, because we will then start publishing the reporting frameworks under the new DPM 2.0 format, and of course with new products derived from there. But we will keep the publication of DPM 1.0 in parallel. So this will be kind of a reverse mapping of the information of the metadata that we have in the new model to the old model. Of course, the old model will not be able to contain everything, of course, not the new features, but it's so there's kind of a downgrade of the model, but this is necessary to enable people to continue supporting their solutions and being able to report in the end. We will also take this period to adapt our reporting platforms, which are now based on the DPM 2.1, and so should do all the other stakeholders which have taken the DPM as a component in their reporting system. So if they're not using it merely to, to understand the data concepts, if they are using it as a really dynamic component of the solution, then of course they will also need to adapt. And this is actually the main reason why we're having this transition period. Then by the end of 2025, we will not be publishing anymore the current access database with the current DPM. We will stop this. We will only, from going forward, publish the new DPM metamodel and content, of course. And this coincides also with the date where we will also stop receiving XBRL XML reports, and we will only receive XBRL CSV based reporting. This, of course, I must clarify, will not apply to resubmissions because those are based on previous taxonomies. So it will be asking too much for people to change everything, even for resubmissions of periods which are not yet defined with the current metadata and according to the new taxonomy. So that's how our timeline looks like. That's the roadmap to move from where we are now to where we want to be by beginning 2026. There is one particular case, which is the Pillar 3 use case. This is something completely new, a new mandate to DBA. It's something that will be that should be up and running by 2025, not end of 2025, but earlier, so more like the beginning of 2025. And this will anticipate for this specific use case some of these things that I just mentioned in that timeline. So Pillar 3 will be based on direct reporting from banks to DBA, so it does not go through the sequential approach. It's a direct data collection, and the dissemination of Pillar 3 data will be centralized in the EBA Data Hub, which is also being built at the moment. And this data collection and all the data transformation that goes with it will be based on the DPM 2.0. So for this is a completely new framework, so it will be supported directly on this. And the format to collect data will be XBRL CSV only, so no XBRL XML. So this is kind of an exception of that timeline, because we need to anticipate this for the Pillar 3 use case. And now let me talk a bit about something that is exploring the application of the DPM outside the traditional use cases of EBA and EIOPA. So there was a feasibility study on integrated reporting that was led to the EBA, so EBA was mandated to do this. And following that publication, the information coordination group on integrated reporting by the banking sector, long name, ECB IRB, was set up, was created in 2021, and there are representatives from the EBA, from the ECB, from the SRB, and from the Commission. So this group has a mandate, and the mandate is described here in terms of what is the purpose and the objectives, what kind of actions are expected, and what kind of deliverables should be produced. But what I really wanted to, so this covers basically almost everything about the problematic of integrated reporting. But what I want to highlight is where it links specifically.
You are mute, Carlos.
There is
10 seconds, only 10 seconds. Okay.
Yeah, strange. I don't know. I'm trying. Okay. So I was saying there is this mandate that covers basically all aspects of integrated reporting in the banking sector, but there are two specific aspects which refer to it's basically one. So the group is supposed to identify what are the critical issues for having a common, building a common data dictionary for banking reporting, and also to plan for the delivery of such a model. So this is where it links to the DPM 2.0, because in the meantime, as we mentioned, we've been developing this for the last 3 years. So it's something that looked like potentially a very good candidate to have this role of being the common data dictionary.
Carlos, can you unmute?
I'm
not sure what's happening. Yes,
I don't know.
something strange. Okay.
I don't know. It's happening a lot. Okay, sorry. Let me put this out of the way. So the creation of a common data dictionary requires integration, because we are talking about possibly different sectors or different frameworks, and the integration must happen at 2 different levels. So at the semantic level, meaning the content, and the syntactic level, meaning the structure. So there are differences highlighted here. Semantic integration is about the meaning of the data and the terminology used, while syntactic integration focuses on the data formats and structure of the model that holds the metadata. On the semantic side, we try to align definitions and meaning. On the syntactic side, we try to align the structure and the syntax used to define the elements. One is about having a consistent understanding of the data. The other one is to have compatible data representation. Semantics is about supporting the interpretation and the universal applicability of the data, whilst syntactic is more about the data exchange, data processing, that what is will support best. And basically one facilitates interoperability, which of course is the basic requirement based on the shared meaning, whilst the other one enables the technical interoperability based on formats that are compatible or the same. So the formal coordination group has set up 2 expert groups to address these 2 aspects of the integration of the common data dictionary at semantic level and at syntactic level. One of these groups was called the expert group on DPM Refit. So as I mentioned, DPM Refit, meaning the metamodel, was seen as a serious candidate to have this role of providing the syntactic structure of the common data dictionary. And therefore this group, which included experts from DBA and from BCB and from the Commission and from some CAs and also EIOPA, the goal was to assess the ability of the DPM Refit for modeling and hosting the IRF implementation model and the underlying logical data model. Why is this? Well, IRF is supposed to be capable of representing the requirements that we will expect from statistical reporting. So IRF is already ongoing. There are experts dealing with this. So that's what we did, was to bring together the people which are experts on IRF and the people that have been developing the DPM 2.0 so that we could do the exercise and finally try to assess this ability of DPM Refit in that new context. At the same time, we wanted to identify if any additional features would be needed, something which would not be included in DPM, to cover those specific RF business cases which are not, let's say, so familiar to the experts that have been developing the DPM 2.0. And the conclusions after this work has been done, which included also a POC, so using some specific examples and see what the result would be. So this showed that there was really a very good coverage of the RF specific requirements, and then the DPM Refit metamodel can be seen as a very good candidate for hosting the needs, the models of IRF. So this was the result of the technical evaluation, which was made by experts from the DPM, but also from the IRF side. There were some workarounds and improvements. Many of them were easily implemented immediately because small things, but there was no identified showstopper. So from the technical perspective, let's say, the conclusion was, okay, nothing, let's say, impedes the DPM to be used in that type of use case. But one important thing that also came from this exercise, this study, was that what is really important also, if we are going forward in the adoption of DPM Refit in this context, where we will have different authorities sharing the same data dictionary and having to manage it together, then there is a very important focus on governance, on the data dictionary governance. So we need to have a structure, we need to have policies, we need to have processes to deal with this. And this was one major conclusion. And then immediately afterwards, the expert group then moved to this topic And we started also discussing what could be those policies and how could this process look like. A report has been produced, has been submitted to the ICG for approval, and that is basically where we are now in terms of the potential use of DPM 2.0 in the context of integrated reporting. And finally, to complete the presentation, I would like to explain you, for those of you who are not so familiar with the DPM, how we can, or how we do link, make the link between the DPM and the XBRL in the two flavors, to the XML and the CSV. So what you see in this table is information which was queried from the DPM. When I'm using 1.0 because that's the one that actually is still being used and mapped. So it's information, metadata about one single cell, which is of a template C80W, and it's for row 260, column 130, and S999 is what we have been using to represent that we are talking about a template with open sheets, meaning the number of sheets is not predefined for each case. In this case of a currency, a new sheet is generated and the number is not predefined. So I think most of you will know what I'm talking about. And this specific cell corresponds to a specific data point ID, which is that one that you see there, 458609. And then the rest is metadata that describes the data point. So we have the one metric, which is stable funding weighted amount. And then we have a collection of pairs, dimensions, and members that you see there, which is what gives, let's say, the full meaning to the data point. Now, when we look at how this is then reported, this data point with the value using XBRL XML, it looks just like this. So this is the code that defines the fact value reported for this specific data point of this cell. And if we look at the representation with the new XBRL CSV format, it will look like this. So in this case, we have a data point ID and the fact value, and we have a couple of other properties that I will explain later. So let's now understand how these things map. So, okay, first of all, we have the fact value in both XML and CSV, and the fact value, of course, is not part of the DPM. DPM is only about metadata, it's not about the fact value. So these appear like this. How do we map the DPM to XBRL XML? Well, it's via the dimensions and members, as you all know, and the metric. So you can see those highlighted here. So you have dimensions in the darker blue and the members in lighter blue, and you see how they are represented in XBRL XML. This is what Aitor was referring earlier as being a very, very verbose format. So there are lots of information and text, which is repeated over and over and over for each of the many thousands of data points. So then you understand when this is translated into XBRL CSV, the compression ratio it can be something like 98%, 95, 98%, something like this, depending a bit on the type of data. So on the side of XBRL CSV, the mapping is simply done by mapping directly the data point ID. So you don't need to worry about all the dimension members because those are explained in the DPM already. So all you need to know is what is the data point ID and what is the defect value. In this case, because of course we are talking about an open table with sheets that repeat, and we see here that the dimension is currency with significant liabilities for which we expect a key value to be reported in the instances. So in this case, the value of the specific instance is not defined in the DPM. It could not be defined, so that's why I use the X999 placeholder. But in XBRL XML, you see that now this refers to British pounds, and in the CSV, you also need to indicate, in this case, a column that defines what is the key that distinguishes this data point from all data points with the same code, but referring to different currencies. So this is basically how we can and do map the instances that we receive either in XML or CSV to the DPM, first of all, to validate the files, and secondly, to load the information defect data into our data warehouse. But of course, you can think of the reverse process, which is when someone on the side of institutions needs to produce XML report or CSV report. It can, of course, also use the metadata in the DPM as long as they know already the mapping for the defect data to the data point ID. The process is very trivial. And I believe this is my last slide. It is my last slide, so I will just stop here.
Thank you very much, Carlos, for this very clear presentation. I think that you covered the topic of the possible use of the DPM or the use for the Common Data Dictionary Integrated Reporting and IRF, but I think we have a couple of questions here, not sure if, but one is how DPM 2.0 is connected with IRF requirements from 2027 onwards. Do banks need to adopt DPM 2.0 as a mandate? This is one of the questions. I guess I'm not sure whether this is so much for us to answer, but not sure if you have any view.
I mean, we on this one we can just say, okay, that this is still ongoing, right? So there is no decision yet about whether or not the DPM will be used to support the IRF data dictionary. What we know as a result of the expert group is that there are no impediments, no technical impediments. And in terms of the governance, we also discussed, and there also seems to be kind of a clear agreement how this could work. But in the end, at some point in time, someone must really decide to use DPM or to use something else.
Okay. Then there is a question in the relationship between DPM 2.0 and the bank's integrated reporting dictionary, aka BERT, developed by ECB. Are they not overlapping?
Well, not really overlapping, but they can be a close connection. So, first of all, the DPM that as we are using it now, of course, focus on data that should be reported to the authorities, right? So it's at that level already. So something must have already happened before we get to that point, right? This is where eventually the solutions that deal with mapping from operational systems to the level of regulatory reporting should work, and BIRD is exactly positioned in that area. Now, a different question is, but can we actually use the DPM 2.0 to store the metamodel of BIRD? And the answer of this is yes, because that was exactly the purpose of the expert group on DPM, was exactly to see, okay, how can the DPM 2.0 support a model for IRF, which is basically the same thing as a model for bird. So that was the purpose of the exercise. That's why we run this POC.
Okay, very good. Then there is a question on XBRL CSV and JSON, whether CSV require an accompanying JSON metadata file. And then the last question, and maybe you can take both at a time, conscious of the time. The XBRL CSV example did not handle the entity sending the file, not the period, which the XBRL, I think this is a comment more than a question. But we have a question on CSV and JSON, whether it should be requires an accompanying JSON metadata file.
Well, yeah, that's an interesting question because the CSV format for XBRL requires a mapping between the format of the instances, the structure, and the taxonomy, right? So this mapping is required, and this is why there are JSON files also produced as part of taxonomy. So this is not something that the institution, the filer, needs to do. It's the regulator who is also issuing these JSON mapping files, let's say. So they define basically for each data point how it links to the taxonomy. A different question is this the only way of doing it? Well, it's not, because as I have just shown you, you can do the direct mapping from the DPM without going through this. So it's alternatives. Either you have your process set up relying on the taxonomy, and then you need to do this mapping, and then I don't even know how exactly this will be implemented, or use one process which is extremely simple, which is mapping via the DPM, and then of course you can just produce your XBRL CSV report files.
Okay, there are a couple of other questions on data point ID. Maybe we can have a look and answer in the chat in the interest of time, because we should be now on our break. So maybe you can have a look, Carlos, and answer in the chat.
Yeah.
Okay, let's do that. I think that we can have a short break of let's say 5 minutes. We start 5 minutes later the next session, which is the use case of DPM driven reporting. So maybe we can be back at 4:25 at 4:25. Okay, and then we resume with the rest of the workshop. Thank you very much, Carlos. This was very interesting. Thank you.
Okay, thank you.
So good afternoon again. We will go to the third part of the workshop after the presentations by Aitor and Carlos. We will now have the presentation of a use case of DPM driven reporting on a bank. So the use of DPM standards is quite widespread across EIOPA and EBA competent authorities. The use is not so common, though, across institutions. But there are still a few of them that are already using it, and we thought that it would be interesting to share in this event the experience by Erste Group. Christian Ronacher from Erste Group will now present how they use the EBA DPM not only to prepare their supervisory reporting, their regulatory reporting, but also for other interesting use cases. Christian, please go ahead. Welcome and go ahead. Thank you very much.
Hello, thank you. So first, maybe some bookkeeping. Can everybody see me?
We can see you. And we were seeing the slides. Now it's blue, but I think.
Okay, and
if you try again.
Yes. So 1 second.
Yes. Yes. Now we can see them.
Okay, I just try to adopt it and do it full. So right now, so
now
you should see this.
Yeah.
Okay, cool. So So I can't see any reaction, so I'm just doing my presentation and maybe questions later on, or if there is time, or maybe their email. So my talk is about the TPM, or metadata models, and why it might be a building block regarding a potential AI strategy. So before we just a short introduction from my side. My name is Christian Moraha. I work with Erste Group, an Austrian public listed bank, and I'm responsible for the FinRep reporting of treasury products. And so I'm actually working in the treasury accounting department. So I'm the head of nothing. So everything you see here is kind of grassroots project and driven by a kind of vision and naive, exaggerated self-empowerment. So we have this campaign, believe in yourself, and this is true for the employees too. So in fact, this whole project has been driven by a lot of people and is still enabled by a number of people. And the key concepts brought to you by me is almost every part is developed within a team, and a lot of efforts and things you see here are part of a team effort. So still a small disclaimer. So this is not the way Erste Bank does statutory reporting. Me and others are just delivering a small set of treasury data for the Austrian entities. And the things I show here are not mainstream. So not mainstream in Austria and not mainstream within the bank, but we provide some data for statutory reporting. So, and in fact, the slides I present here are an outlier or a kind of minority report. And I'm really a little bit proud that my employee allowed this kind of minority views regarding statutory reporting. So now, without further ado, let's start. So what do we do with the data point model? So first of all, the data point model, we use it as kind of metadata framework. I think that's rather clear. And we extended the FinRep taxonomy to generate also our own templates. And how did we do that? So we used EBA's dictionary and add our own dictionaries to EBA's in a kind of way that we know that it's our words or our dictionary entries and not EBA's. So we use this especially if we have kind of IFRS requirements to fulfill and find a way to report them. So we do this also via the data point model. And what we did here is that directly connect the metadata to the data based on the regulators framework. You will see later on some examples regarding this topic and how this works. And 2 years ago, we thought, okay, with the coming up of the large language models, we thought, this might be also a cornerstone to kind of enable querying data by natural language or by conversation. So, and those are the things I want to present a little bit. And so our key idea was to provide self-explainable and curated data. So that was the initial goal. And then we came up, okay, which can be queried by conversation. So that's an additional topic which came up in the last 2 years. And to achieve this, data must meet the following criteria. It must be consistent, it must be transparent, it must be efficient, it must be validated, and simply accessible. But to be quite frank, those 4 other topics are just bullet points, which sounds nice. So in our case, we thought consistency is the most important one. Now, some might say you go for the wrong property. Data have to be correct. But I have a very practical problem with this term correct. Operationally, the word correct is useless. We couldn't find any automatizable way to identify correct records. So we went for this much weaker property, consistency, and we stole a concept from Sir Karl Popper and assumed that if a record is consistently reported and not falsified, it is temporarily true. So that was the key idea behind this consistency thing. And what we right now think in our small group is that metadata might be a cornerstone to provide meaning, or are a cornerstone to provide meaning to reports and make them queryable by conversation in an auditable way. So what do I mean with this queryable by conversation? So, and I just before I explain the details regarding queryable by conversation, I just want to give you a hint regarding the presentation. Whenever you see this dark greenish background color, or maybe it's light gray within your team session, then it's kind of experimental stuff. So it's things we did on our own, or just experimenting with stuff. So be aware of that. So that's just kind of lab thing we introduced here. So here you can see in a conversation we did with GPT-4, and we connected it to the data model, to some templates, and asked what is the carrying amount in this case. So, and the data point model gave us a kind of feedback. And if you wait a second, I just to give it a laser pointer. If you look here, you have a kind of description, and you have the context of the data, and you get even data out of the model, yeah, because we provided it. Yeah, and the focus of many people are is the data correct? In this case, the data is completely correct for the Erste Bank group for the already published annual report, but it isn't trackable. We can't track those kind of words GPT-4 is giving us, and this is a problem and a big one. So that's problem number two. But problem number one, sorry. But problem number two is a kind of other type of thing, because we want that the reports follow the question, and not that I have to know which report answers a certain question. That's a very big difference. There are a lot of use cases where people don't know where the data is, or which report they should query. And we thought, okay, it might be a good idea if reports follow the question and I get reports according to the question. So this is another thing. This is publicly available. I have experiments started with this, but there's a much better YouTube video out there which explains this kind of concept. And that's kind of the question, what is the population of France? And then you get GPT-4 answer or a large language model answer, and you get a report according to this, which might be related to this question. So I linked the YouTube video here because this is conceptually the very same thing we want to achieve. So in order, I want to present those kind of missing links and gaps and what we did here. But in order to understand that, you have to know where we come from. So, and this is kind of presentation where I also want to illustrate the key concepts, what we do a little bit differently than maybe others. So in 2015, we decommissioned about 8 treasury systems, and it was replaced by one system. And we had to come up with a new framework, how to report stuff. So, and in big companies like ours, like in banks, replacement projects tend often to work like this: take the old requirements, just rewrite them for the new ones, and do the very same stuff. And we thought, okay, how could we come up with a framework which helps us to solve this problem? So you have a template. Then you do the mapping for each cell, but it could be a row, or it could be a column, or it could be a segment of a template. It doesn't matter. And then you write code for this. Write code for the cell, maybe a select query, maybe an MDX query, or whatever. And then you do the documentation, and then you have to link it to the business documentation, and you have to maintain this stuff. So I looked for frameworks out there, and to help me to kind of get rid of this documentation burn. And I had the very strange idea to check what the regulator does in this case, because I thought maybe they have the same problem. And they sure did. Yeah? So I came across the data point model in 2015. And I saw all those annotated Excel templates, but also the data point model. And what I was most interested in was the templates for sure, but also this metadata description of the templates via a centralized FINREP dictionary, via this FINREP taxonomy, which has this dictionary. And as you all know, for us, this description is very, very nice, because it describes a cell in a structured way with this dictionary, which is centralized and which comes from a regulator, and where I don't have to invent anything. So in this case, it just says, okay, show me the metric carrying amount for the counted portfolio cash and assets and things like that. So I can have these keys which are incorporated in this model. Yeah. So the key idea was, here I have 10,000 cells to query or to map, and here I have just 300 members to map. Just let's map those 300 members and use the EBA data framework, and this should do the rest. And this should be much easier because it's much less work, because there are 300 members and 10,000 cells. So man, was I wrong. So that was completely, that idea completely failed, because it is a lot of work to do this in a consistent manner. But we didn't know that, and therefore we came up with ideas how we could do this. So we thought, okay, let's take one member, let's map the member to our data, to our system, and let's ask the following question. How can I find, for example, in this case, assets within your system? Then the solution provider says something like this: I don't know, come up with a rule. And then we come up with a rule and say, okay, this might be the rule, and then we get the results. And the results depend on the system. So if I have a general ledger account system like SAP or any other, maybe I get account numbers or something else. If I have a mid-office system, and maybe I get trade IDs or position IDs. I don't care, but it has to be documented somehow. So that's that was the key idea to map it to our data. And this was a lot of work. So this was a lot of iterative work, and this was done by Christina. And you always had to go back and forth and try out if the cells produce the correct results, and if not, which member is wrong, and things like that. But it also has to be done within the system. So this was done by Andreas, and those two people have to cooperate really, really well. So that was the kind of key idea how we can query any system, so to say. That has some limitations, but that was at least the key idea. So then we used a kind of big data warehouse that had to do primarily with historic and operational reasons. I personally think that this centralized approach is not the best one, but in our case, it was very, very important. Firstly, we had so many data in there, which were useful to us. Secondly, the people who were in charge of this treasury data warehouse are just brilliant. And last but not least, they helped us a lot to implement it. And that was very good reason for under a lot of pressure. So there you have maybe this big table, and you have all these postings and hundreds of other dimensions, or at least dozens of other dimensions. And then we had to incorporate those keys, and not numbers or not interfaces, these keys into this kind of big table. And in the next step, we use those rules and tag those according to those rules. We could use a dimension and say, okay, in this dimension, you're an asset, and then you're a liability, and then you take the main category and have cash and something else, and the accounting portfolio, and do this for stuff. Except this doesn't work. Firstly, or it didn't work with us. Firstly, it's too slow. And secondly, the FINREP templates don't work like a cross table. You can't pivotize them. Some you can, but most of them you can't. So you have those rows and columns which are completely unrelated to other rows and columns, and this might be a problem. So this was the biggest problem we faced, and we challenged even those brilliant guys, and they told us, you can't do that. And this was really a struggle. And then Bernard came up with a solution, actually looking at the data point model, and it might be very, very familiar to you who know the data point model in more detail. He came up with this kind of idea. Instead of matching or of tagging each and every dimension, let's do kind of group string where we concatenate these kind of properties into one string, and therefore we use the cell information, which can be written as a categorization key, as a kind of search key for this group string. So whenever there comes a accounting portfolio for 2576, then you get a result. If you go for a base 156, which are assets, show me all assets, then you get just all assets. If you query both, you get just the first one, or just those which have a similar pattern, let's say it like this. So in the next step, the producing the numbers, it's rather easy because we have already the big table, we have the data, we have the rules, we have the template and search criteria. We just have to map it accordingly. Sorry, wrong direction. So producing the numbers is nothing else than using those templates, using the search criteria and this categorization keys implemented, and deploying the rules and going for the data. And this is the very same template. And here you can see some context, but what you can see too, the numbers are not important right now, is that the x-axis and y-axis of the templates are completely dynamic. And I have to emphasize here, this is not a two-dimensional template. It's millions of postings which result in this kind of Finrite template according to the pattern you have seen before. So this table is completely analyzable. You can click on a cell, you can drag and drop the dimensions, you can query it in every aspect, and that's very powerful for us. So just to make it sure, this is just test data, and the numbers aren't important anyways. So what we did next is, okay, let's take the very same information, give it to GPT-4, connect it to this kind of mini data set, and ask it if it could reproduce this kind of template, and not a kind of those categorization keys, you can see here, but kind of result set. And here you can see after just one prompt, that it came up with the very same solution as I described here. So just enumerating the context of the dictionary, but not only for the cells, but also for the columns and rows. And still, this is just a kind of presentation, how you want to have it presented. We asked, can you find a kind of commonality between these categorization keys? We gave GPT-4, and it came up with this kind of description, which is very, very true and valid. So you can see here it's coming all from the metadata description of the data point. Even so, we did additional stuff just for fun. I said, okay, can you compare this cell to the other cell, to cell or row 10, column 10 to column 20? And again, very, very instructive information where it pointed out the differences between those cells. So now I just want to think about what does this mean if I can connect it to data too. And if I have this kind of semantic descriptions provided by the data point model, and I have this kind of rule sets which are true, which explains the data and which is connected via the rules to the data, you can make data really explainable and also queryable in our opinion. In order to achieve this, you have to follow some guidelines, and I just put out 3 guidelines, and I hope I don't bore you too much, but I think that's important. So I told you already, before you think about correctness, think about built-in consistency, and the data point model provides a lot of consistency. Sorry?
There was an interruption, but I think you can continue, Christian.
Okay. So just one consistency we have. So regarding this concepts, if you say, okay, query all the derivatives, maybe I get a number of 0 because the assets and liabilities are just the same. And if I do the very same thing for the assets, I get some numbers. And if I do this for another word or dictionary entry, maybe OTC options, I get additional numbers. And this query as a whole has to produce either the same results or a smaller result set than the other one. And validation rules also always goes for the numbers. This isn't enough, and I just illustrated later on why. And this is the built-in validation rule. No, I don't want to say validation rules, but built-in consistency checks the DPM provides: hierarchies, categorization keys, the dimensions and its members, the appearances within the templates, the cell definitions, which are intersection of the rows and columns. This is very, very powerful if you follow this kind of guidelines. But what we are also missing were this kind of relationships between those members, and then this dimension main category, this kind of, I always call it garbage collection dimension, but it isn't like this, but this is kind of thing we think could be improved and are for sure improved right now, and the validation rules which should work for data sets and not just numbers. So why validation for numbers aren't enough, in my opinion? So I showed you already this showcase where you have, okay, show me the assets, but only the derivatives, but only for the instrument type of OTC options. And if you have a kind of connection where you say an OTC option must be a derivative, then this result is according to the numbers correct. But I have this kind of data sets or record sets which shouldn't be there. It should look something like this. And this can only be done with record sets and data sets. So what's also very, very important to us, another guideline, is that we go for the meaning and not the result of the number. So we want to add words to the dictionary if possible, and just producing the correct number is not enough. So one example here. So this is a counterparty sector hierarchy, FINRED counterparty sector hierarchy. And we found out that for almost all, or that for all tables, this hierarchy works very well. But there was one table where the results weren't weren't as expected. And first we thought the expected result is wrong. But then we dig deeper into the problem and we realized that in this table, the regulator doesn't want to see our own shares. So, and therefore we added additional dictionary entries to our dictionary. And you can see here, credit institutions is just a kind of summing up those different concepts. And the next thing, which is very, very, very important, so that we go for the meaning and find every meaningful error where consistency is guaranteed. So you see this red and you see this in bold, but actually this is the wrong things I emphasized. I think I should have go for the error. This should be the main message here. Always go for the error. So challenge the system, challenge the consistency. But still, when a consistency is guaranteed, what does meaningful mean? So this is very, very strict. Meaningful means errors above €2, because where consistency is guaranteed, those 2 errors can't be, they have to be eliminated. Just an example, if you have a definition like C is A plus B, and then you can do a kind of mapping where you say, okay, a semantic mapping, so to say, C is just A plus B or A union B, or you can map A, B, and C. And if you go for the first solution, then it's just a weird technical problem. Business doesn't have to care about it. IT check it. This is IT problem. But if you go for the second option, then you have to do an additional analysis. And this analysis is very, at the beginning, very hard, because you have a lot of troubles and you have to kind of cluster them. And it's very important that this is done, and this is done by David's team, who do an incredible job regarding this mapping and regarding keeping consistency out. And we always. Yeah.
Sorry to interrupt you. Just be mindful of the time, because we are close to finishing. I don't know how many. Yeah. Okay.
So I just maybe I just wanted to add some experiments we did here. So how we want to use large language models is kind of conversational, not as kind of give me the results, but check what the user intends and what I have and how this questions can be interpreted, so that we have a kind of computational knowledge engine which connects to the correct systems and to the correct frameworks. We do it with this kind of architecture. And here you can see that the architecture is not important, but I just wanted to add that the data point model is very, very important. So, and here we just have kind of use case where we go for the sustainability reporting, where we try to find out data from the sustainability reports provided by the big companies, by the public listed companies. And the real world examples, it should look like this, the templates, but the real world looks like this. So we have text, we have other templates, and therefore semantic meaning matters. It doesn't, the format doesn't matter, but the meaning matters. And there, for this use case, we want to use the data point model 2. We already use it, and this is a kind of thing we introduced right now. And so we think this is public data, and we want to share this data. So whoever is interested, please write me an email or contact me. So I just skip over this very, very fast. Errors are easier to find. We have out-of-the-box maintenance done by the regulator, the templates and those things, the dictionaries. Changes are much easier to introduce. The DPM is agnostic to models and formats. This is very important to us. We have much less code because it's all configured within the templates. Not all, but a lot of the analytics are also included by this kind of way, connecting it to the data. Validation follows meaning. I introduced this already and showed the different use cases for that. And we have a separation of concerns, not only regarding the member, regarding the cells and dividing it into members, but also regarding semantics, regarding the rules, and regarding the data mappings. And we have an insane increase in data quality. That's really incredible. Right now, we are really incredible good in this regard. So, and this is kind of yet unexplored potential, which I think will become very important. So we have this kind of universal conversational data retrieval interface versus linear chatbots, which might be supported by metadata frameworks. Instead of searching, ask, which, and again, this conversation can create improvable knowledge for the company, which creates maybe a marketplace for data. And what we tried out is kind of connecting different models via metadata models. I just want to show this, and then I end. This is kind of thing we introduced. We injected the ÖMB wiki description for the very same cell, this kind of pseudocode, which is published within the Austrian National Bank. And then we asked GPT, according to the rules provided of the data point model, what is the difference and how can you connect those two models? And it provided a kind of mapping engine, or not mapping engine, mapping result from the model to the metadata model. We did this also model to model and metadata model. This worked not so well, but it could be improved very much. So I just skip those things, which in my opinion are also very, very valuable for us. And this one too, where I just illustrated that we combined the IFRS taxonomy with the FINRA taxonomy by adding a dictionary. And this is kind of thing I want to finish. So this is kind of explored, but completely underestimated benefit in my opinion. So it increases knowledge and understanding of all team members. And we have a common vocabulary, and therefore fun increases and pressure decreases. And this kind of key finding for me, and it's so much fun working in this context. And I want to end with a kind of quote from the Hitchhiker's Guide to the Galaxy: "Let the machines get on with the adding up." Thank you very much.
Thank you very much, Christian. This is really interesting. And I mean, I like the last benefit of improving the atmosphere and the working place. That's very good as well. But this is very interesting. I'm sure that there will be plenty of questions looking at the reactions of the attendees. Maybe you can address them to us by email, and then Christian can provide feedback by email in the interest of time, because we have now 2 minutes left, and we have, but if it is okay, Christian, any questions, we can receive them by email and we can forward them to you. Then we are then moving to the closing remarks, the end of the workshop. Daniel Perez, head of the Data Analysis and Processes Unit at EIOPA, will do the closing remarks. And thanks again, Christian, for your presentation. Yeah.
Thank you very much. Unfortunately, my head of department couldn't make it, so I will do the closing remarks. And first of all, thank to all the speakers, particularly the last one from the industry, to provide a list of benefits of using the data point model, which is something to be considered also those that are unexplored or unexpected. So thank you very much. It was not commercial from the work. It was a way of presenting, very proud of the teamwork as we did one today, thanks to all the speakers, particularly the coordinators of the DPM Refit project from EIOPA and EBA, because this was just to share with you, the industry, were positive experiences using the DPM standard during the last 10 years as regulators, and the DPM core is a core piece of our regulatory reporting and very useful developing and maintaining our big reporting frameworks. And we knew that somehow it is in principle of limited direct use for financial companies, but the intention of this introductory seminar is more informative, is give transparency to the work we have done. The purposes is that, and rather than being illustrative or very technically oriented, I think we managed to get interest because we received many interactive action in the chat. I hope that most of the questions were really addressed during the oral speeches or directly in the chat. As Pilar mentioned, we will share the slides, and the presentations will be available so that you can also engage and contact us for further questions or comments. So we are there for the further engagement on this topic, and also highlight the importance for the EU and the national regulators that are adequately using, promoting, and setting standards. As we've seen in the last presentation, I think that the bringing consistency or taking it as granted make the other checks possible. Also, we explained that the DPM 2.0 will support better cross-sectorial standardization and will be very important for as a step for a common financial data dictionary. The semantic integration, I think it is granted with this new standard, the renewed standard, and in line with the Commission Supervisory Data Strategy. So only to show this project as to speak about interinstitutional coordination and joint cross-sectorial efforts at ESA level. So we are proud of it, and we wanted to share. And that's it. I think that just to thank, we had moments for more than 400 participants, and it was varying along the seminar. But we thank you to keep with us, and also we try to close it on time so that you have the rest of the evening. Thank you very much, and see you soon.